Hey everyone, DayTraderRockStar here with you with a special market update and a kick-ass trade alert. One which I think is a real good long-term position trade, and I don't think it's too late. And I've been pounding the table on it for the last 2 weeks, and now it's really starting to move out. So I just really want to put the vibes out there and talk about it a little bit more, and maybe get people on board because I can see this as a possible double. Anyway, just getting back to the S&P cash chart, and right now it's, after last couple of weeks and the volatility in the market's kind of regaining some of the just the calmness factors coming back into a market. We're not seeing as big as swings. We are still seeing swings and stuff, but over the last 3 days we've been holding this level. Normally we've been seeing very violent swings, to the upside, closing down on the bottom. The low of the day. Next day closing at the high of the day. Next day low of the day. Next day high of the day. Now a little bit further push up here, and and seeing this over and over again. So many times you can see this easily just drop off and retest back to the lows. So it's just very hard at this point for me to really just gauge what the market's going to do. And I don't want to be a hero. And I think at this point right now, it's a gamble both ways. I still think there's individual stocks that need to be bought at this level because longer term I am bullish. It's just about a matter of the short term violent moves. We still have about 1,000 point move down in the Dow to get us back down to it like a double bottom. So it's that's quite a bit of a move. So you don't want to be too aggressive to the long side or too aggressive to the short side, because there's no reason why this market doesn't pop on some type of news. Right now, the daily stochastics are trending up. They're bullish. All right, but as any indicator follows price, and if the price is down tomorrow, the indicator will slowly reflect that down the way. So it's not really the textbook, but you get a feel for what the market is doing. Stochastics and indicators work great when the market is trending, but when we're very choppy like this, you can easily get these things just to give you a false signal. So you have to be more cautious. There's nothing special in this video today, except knowing that this is actually a time to prepare for yourself for anything, pop up or move back down. And at this time we do most of our research. You continue to look at things, pick away at certain quality names if they give you an opportunity, and from that point on, really concentrate on getting a tighter focus list. And a tight focus list, we went over that a week ago and the week before that. This week's watch list was pretty tight and very good, and I want to just review that. But the first thing I want to talk about is the stock that I think is probably the best bet for the remainder of the year in these market conditions. All right, Brazilian foods, and you hear me talk about it all the time on the radio. Each and every day we see it moving up. I've traded this from back over here, and we followed it down, and we got hit with the news that it was there was the issues with the merger, so it dropped off and it came back, and then we started trading it again, and we got a nice inverted head and shoulders. But this is where the news came out saying the merger was fine, and there's some history behind this. But the truth is, we're not that far back off the 52-week highs, and this stock has continued to show its growth potential. I mean, it's a major food company in South America. And that's not going to just die out. So the opportunity, I think, was here. But in hindsight, you're not going to, when you hear the weakness or the rumors, the manipulation that happens in the market, and that's basically what it is, manipulation, because an article came out saying they didn't think that the merger would get rejected, or it would be a big failure, and so against a person's article, who the hell's writing articles? Like he has an opinion, but all of a sudden the market gets hammered on the opinion of this person, and he's totally wrong. In the in the long run, it comes out that he was wrong, and it was just an article. So now the market's trying to regain its strength and get back up to where it was before all this happened, and it just looks great. Looks fantastic. So I think this is a really good long-term play. Do your due diligence on it. Look up the company, look up the previous earnings. Make yourself familiar with it. But as a chart pattern and seeing this type of chart pattern, this very tight sell off again, but that real wicked bounce right back up towards the highs. Everything looks good, like this thing wants to continue. Now, there's always the chance of whatever news is out there to hit, but technically this is a very bullish scenario right now. So we expect this to break out of this recent high, make its way up to here, and just slowly climb. Slowly climb. So this is a long-term hold. This could be, this could be a multi-month hold, easy. I wouldn't go, wouldn't be surprised in a year or so you see this as a $40 stock. That's what I'm saying. All right, well, a couple other stocks I want to look at. Amgen showed great strength today. This is when we look for that bounce. Got the bounce. Stochastics in very bullish. It was actually quite, it was a pretty good day. All these stocks have gotten these bounces since the market sold off. Really came up and really bounced. So it's really harder to feel the confidence of chasing something at this level. So you have to really been in here, feel good. But this one still looks very good. It was actually had good positive earnings back here and got hit with the market. So we're probably going to look for this one to get back up to that 54 area. 54 area before, right after the earnings. WHR, Whirlpool, is actually starting to form what I call a W pattern. My W pattern is basically the drop. Let's see, and I have a different charting program here, so I got to click on this each time until I get that fixed. The pop and the first retracement. All right, and then the retracement's going to hold. Stochastics actually look pretty strong, and then we get that move up like this. And this is your W pattern. A very good reversal pattern. You have to really just have confidence in how it works. You just buy the first retracement of the first bounce. So a very steep sell-off, a bounce. You can get a nicer bounce. It's, this is okay bounce, and you're gonna look for like a little retracement. Some cases, sometimes you could actually time that more on the 15 or 60-minute chart to see where or on the 5-minute chart. But I don't look for more than really 50% retracement. And it's kind of a it's a play on a pattern that works out a lot. So it's the opportunity is just failing. Also, the market could fail, and a lot of things get dragged down. But technically, Whirlpool is set up, and you can see the 60-minute chart now does give you that buy signal. That's how you would break that down. You would break down the daily chart, see the W pattern, then go to the 60 and see the oversold indicator on the 60, saying, all right, so we're already oversold on the 60. That's the next big chart I want to look at. So this is starting to look really good at this level. So we're going to definitely pay attention to Whirlpool tomorrow. I like it. I would like to add to it. Definitely would like to add to Whirlpool. I was carrying a small amount of shares, 30 shares, and it kind of drifted down, and then I just picked up 50 shares more last, when did I get those? Last week, late last week. And I'm definitely, we start to hold this level, see some strength tomorrow. I am on top of it, probably to double down a little, because this is, the inverted head and shoulders pattern, slanted, where you see the neckline here and the left shoulder, head, right shoulder. We'll zoom out. It's very classic, and the stochastics here. So this is your divergence. This is everything you want to see in this chart. So WHR also looks very good here. Plus, we had some insider buying recently too, and that was off the 10 for 1,000 watch list. Oh, off the 10. So we got the Amgen, we got the Whirlpool, we got the BRSF. Staples, if Staples was the trade from last week. Again, bought it on the pullback, rode it all the way up, got out before earnings. Earnings had popped up, got out yesterday with a nice profit, very nice profit. And then today it had earnings and it gapped up to 15, but sold off, sold off the whole day, pretty much getting a bounce right around $14. But it was a perfect trade. Perfect trade. We took perfect profits in that. Everything looks good. The daily chart now, you can see that. It's just a little messed up, but it's probably, there's other good setups out there. JetBlue is another one that we got into, and basically just into that weakness, and it's holding up great. Stochastics are very strong here, so I wouldn't be surprised to see a follow through in airlines tomorrow. Now, again, going back into the S&P one last time, just to touch base one more time. At this level, everything at this point is kind of up in the air on news. The swings here are just great for traders, but you just have to, plan your positions out and understand that, because of the volatility, you should have to recognize kind of larger stops here. 5-minute chart that we left off, and then the futures are actually down right now. If we go out to the futures, you could see futures are 1182 tonight. That's down 750. So definitely definitely not looking good for a start off tomorrow morning. So futures are down. You look at the charts. Nothing. Everything's going to start off tomorrow. Tomorrow we take tomorrow as it is. Still think there's the potential of a good move down to 1100, and that's where we stand. So hope you enjoyed this video. Three really great stocks. One really great stock to take even further. Also, one last thing on weakness, I'd look to get back into Apple on weakness going forward. And we'll see what we define as weakness, and how this market reacts tomorrow. Tomorrow, I think it's an interesting day. We have a little consolidation. We could break down a bit and still stay in. It's a very. You can see some little spike downs and even get back down to this level, which is where that's where I think we're going 1102. But you can see this 15-minute chart getting overbought. 60-minute chart. Let's take a look at it fast. Making its way down. We're gonna, the way things are looking, we're gonna gap down today, tomorrow morning, and if that's what it is, maybe we'll get oversold in the 60 before we make new lows and we get a bounce. We'll see what happens. All right, I'll catch everyone tomorrow on the radio live, 8 o'clock, 4 o'clock every market day. Taking care of everything, saving the universe. I'll talk to everyone then.